The trading groups will have you in a shambles. They are so controversial in those trading groups. You got to know, you got to have a clear level head to be a trader. You have to, because there's so much noise in the trading communities that you just got to lock in on yourself. You really got to lock in. You got to ignore all the background noise, ignore all the BS, because the BS comes with it when you're in these trading communities. But you got this. Today, I'll just be talking about the Greeks and how they affect the options contract prices. And yes, if you just watched my other video, I am filming in the same day. So don't be talking about me. Well, what is the Greeks? The Greeks is just something that is complicated but easy at the same time. It basically explains how options contract prices change. That's all it is. It's financial calculations that explains how options contract prices change. That simple. There are 5 Greeks, however, there are 4 that are important and 2 that are really important. So I'll discuss that in this video. The delta. The delta basically tells you how much you will profit or lose as the stock prices change every dollar. One full dollar, that is how much you'll gain, profit, or you will lose based off the delta. So typically, the higher the delta, the more you will profit. Also, the more you will lose if it goes in the opposite direction. The gamma basically tells you how stable the delta is. So the theta measures how much the price changes over a period of time. The vega measures how much the price changes based off volatility. That's it. That's it. It's that simple. So let's show how that looks on an actual contracts as if you were buying it. All right, so we're back on Apple, and yes, on the previous video, I also went over this same Apple contract. So if you're coming from there, it's a good thing, so you won't be confused. Okay, so typically when I am buying options contracts, I like to have literally just my delta showing, my open interest, the strike price, and the percent change. That's typically what I like to pay attention to when I'm buying a contract. Not more so anything else. The other Greeks don't matter to me besides literally the delta. I also look at the gamma, but typically I really just want to see how much I'm going to profit. You do what you want to do with that information. You trade how you want to trade. This is just my setup, how when I buy contracts. I already know that the price is going in my favor because, of course, I've did my pre-market analysis. So I'm not too worried about that. And also, I'm very comfortable with knowing how to exit a trade if it's not going in my direction. So, for this video, I'm just putting emphasis on the fact that these are the things that I pay attention to. Open interest and strike price, of course, that is very important. You want to make sure you're aware of those as well. But the most important Greek to consider for me is the delta. That's your money. That's what we paying attention to. So let's go over it. If we were to buy this contract right here for $325, essentially, because again, when you're buying a contract, it looks like it's $3.25, but it's not. Move the decimal over 2 times, and that's the price that you're paying for that contract. So if we were purchasing this one right here, the delta, for every dollar that price moves, you're making $52. So that's essentially how you can kind of see how much you're going to profit based off the amount of contracts that you purchase. Open interest, that shows you how many people are actually interested in this contract, but it's not important on this video. I will go over open interest and other things in another video. This contract, if you were to buy this contract for $204, you would typically be making $39 per dollar that this stock moves. So the more contracts you buy, that's why you'll see a lot of people typically buy a lot of contracts. You'll buy, or they'll go and they'll buy, let's scroll up to a more affordable contracts. They'll buy these $20, these $21 contracts, Yes, the delta, you're only making $6 for each dollar that the price moves. But if you're buying multiple of those contracts, you're not risking as much money. Your profits are not the same. So that's why it's so much controversy on people saying that you need a specific amount of money to trade or to start trading. This is why they're really more so worried about the delta. You do what works for you as a new trader. You're going to see over time that you will start to risk more, but pay attention to the delta. This is how much you will profit. If you can afford that $117 contract, go ahead and get the $117 contract. For every dollar that it moves, you're making $26. However, something to note is that you want to make sure that if you are buying a contract for $117, but you're only making $26 for each dollar that it moves, it needs to be a stock that moves. It needs to be a stock that makes significant price increases either on the upside or the downside each day. So those low moving stocks or those slow moving stocks, you're not going to make a lot of money. That's why it's so much controversy. Pay attention to how the stock moves. Start studying the different stocks and seeing how they move. Whether they're moving $10 a day, $20 a day, $5 a day, $2 a day. That's going to let you know how much you're profiting each day by trading those stocks and buying those contracts. So, again, it's just this is what I pay attention to, my delta, my open interest. The other things do matter, but me, when I'm buying a contract, I want to see the money. How much am I risking to gain however much I'm about to profit? That's more important to me than anything else when it comes to the Greeks. Honey, the delta brings the money. We going where the money reside, okay? We're going where the money reside. Going where the money reside, okay? Again, let's go to puts. We on Apple puts. Same thing. Yes, you can see some more expensive contracts like 445, 615, 1,000, 1,300, 1,500, 1,800. You can, but if you just scroll the opposite way, look at those contracts. They're there. The contracts are there. You won't profit as much, of course, because you're not risking as much, but you still can profit. There go a $10 contract. There go a $10 contract. Can you see that? Hold on, let's go up. There go a $10 contract. There go a $13 contract. Let's scroll up. There goes a $4 contract, $3 contract, $2 contracts. Of course, the lower you risk, the lower you profit. But the contracts are there. They there. So don't let people tell you that you need a lot of money. You don't. Those people, they kind of they irk me a little bit because y'all discourage people from trading. Y'all, I think when people talk like that, I think you're talking to people that just got money to lose because baby, I think they forgetting that when they first started trading, they wasn't making straight profits. You gotta, in order for you to be great at something, you gotta have taken some losses. And that's okay because every loss you take, you're learning something. So, but there are contracts, $20, $16. They're there. They are there. So don't let anybody tell you any different because I told you first. You can't start trading with less than $100. So again, you guys, trade at your own risk. Do what works for you. I'm just telling you guys what things works for me. And as always, if you like seeing more content like this, make sure you subscribe to my channel and make sure you turn on your notifications so you'll be alerted every time I post a new video. That's all that I have for you guys today, and I will see you next time.